I want to welcome you to the Joliet Junior College Entrepreneur and Business Center. I won't say that again, it'll just be EBC from now on. Our accounting panel is here today. My name is Jeff Schultes from the EBC. Fatina Sayeg is our normal moderator. She unfortunately is taken ill, so I'm going to be Fatina today. So you can call me Jeff or Fatina, either one will work. They've been forced to call me Jeff all morning. So I'd like to introduce our panelists. First we have Maggie. I'm going to screw it up, go ahead.
My name is Magali Alapon, but everyone calls me Maggie.
So this is Maggie. Next up is Rhiannon Rapido. And finally, Robert Filato. And they are with us, and we're very pleased to have them here and lend us their expertise. On the flyer you received, you saw some of the topics we're going to be covering today. And I'm going to kind of guide them through it. I'm going to sort of get things started, let them give us their answers. By no means is everybody here going to have to answer every one of these topics, otherwise we probably wouldn't get past the first two because they'll have a lot of expertise. They can all lend us a lot of information on these. So we'll kind of step through them one at a time. If you could please jot down any questions you have, we're going to have questions at the end. I know that if you have a specific question in your head, please keep it ready for the end of our session. We're going to go about 60 minutes with the panel, and then we'll open things up for questions. So without further ado, we'll get started. The first topic we're going to cover today is the whole notion of business entities. As you work with your advisors, we're all going to tell you need to pick a business entity, either a sole proprietorship, an LLC, an S Corp. Sometimes for those of you that have professional licenses, a PLLC. So I'm going to open it up to the panel and just have them talk about the pros and cons of each of these different entities for small business owners.
Would you like to start?
I can go ahead and start. So a sole proprietorship, I guess we can start with that, would be when you're first starting out your business. If you don't do anything, basically you just are starting to bring in income, you have expenses, you don't file anything with the Secretary of State, you don't have any articles of organization or articles of incorporation, you are by default a sole proprietor. It's a separate schedule that you file with your 1040. You can get an EIN number if you want. You don't have to. What an EIN number is kind of like a social security number for your business. It identifies your business. If you decide to formally incorporate or organize as an LLC or an S Corp, that's where you're not a sole proprietor anymore. You can become an S Corp, a regular C Corp, or an LLC. Those are taxed differently, and there's different filings that come along with those. So for example, an LLC, I don't know if anybody wants to take it, just talk over me if you want.
So an LLC stands for Limited Liability Corporation, and the intent there is to protect your personal assets from the company's assets. So at some point in the evolution of your business, I suspect that you will be advised to consider the legal liability, depending on the type of business, that you might expose yourself to. And so you might incorporate. By default, you can file and become a C Corp. You can choose to file a 2553 and become an S Corp. The difference between the two is an S Corp is known as a flow-through corp, flow-through entity, meaning that it flows through to your personal tax return, the Form 1040. And it avoids what's commonly referred to as double taxation if you remain a C Corp. Typically, the only way to get money out of a C Corp is that it's taxed at the corporate level, and then it's paid out to you as the owner, either in compensation or dividend, and so you're taxed at the corporate level, taxed at the personal level. You don't experience that with an S Corp. And that does limit your liability as well.
What I don't see on here is the partnership option too. An LLC can be treated as, you can have it taxed as an S Corp or as a partnership. That would be a 1065 form for the partnership. So if you decided that you wanted to form an LLC, if you have one member for the LLC, just one person, you are considered a disregarded entity. There is no separate corporate filing, and it's just that separate schedule with your 1040. If you do form an LLC and there are 2 members of the LLC, you automatically are treated as a partnership unless you elect to be treated as an S corp.
One of the things with the LLC that is very important is it's a pass-through entity too. It means you can start as a regular LLC, file a Schedule C, and you turn 40. But sometimes the Schedule C becomes limited in the expenses. So I'm always advise my client, if you have enough expenses and enough income, and you are considered to step above, so you can choose to be a S corporation or remain a partnership. But when you are one single member corporation, like she said, usually is not required to file as a corporation income tax at the end of the year. So what's happening, you're going to file a Schedule C inside of your 1040. So when you grow and decide to become a S corporation and you get more members, at least passive members, they becomes a board of directors to take decisions in the corporation. The LLC gives you the opportunity to become a S corporation without changing EINs, without changing IBTs with the state, because it's the same number. You just like upgrade your company. But if in the long run something happens, business start going down, everything is slowing so much that you decide that being a corporation is not good for you anymore, you get the chance to become again a sole proprietorship or an LLC single member and become again a Schedule C. Why? Because that's one of the most important characteristics of the LLC. Give you the chance to be a S corporation, or it doesn't work, become again a regular LLC without changing EIN, without changing accounts, without changing IBTs, and it's still a good thing to do for the business when things doesn't go that way.
So I would say that in my practice, the far majority of my client base are S corps. And the far majority, a lot of them are LLCs, especially if you're a real estate investor.
Yes.
Real estate is, without a doubt, 100% recommended to be an LLC for a lot of reasons and we've already spent a lot of time on one subject, so we probably need to move on, but just in my practice, that's what I see.
One thing that I would like to make a difference between the S corporation and the C corporation is the biggest difference between those two. S corporation, like he said, the gains or losses pass to your personal income tax in the form of distributions. And the state just pay 3% taxes, okay? But C corporations has their own tax, because it's considered a regular entity. So that's the biggest difference with the S corporation and C corporation. S corporation doesn't pay federal taxes, pays state. C corporation pays both.
Thank you. I know that with many of our advisors, when we go through this, I think we lean either on sole proprietorship or LLC. Do you, in your practices, for small business owners sort of just starting out, is there something you normally recommend, or you see people kind of going to as a small business owner to start with?
I think like Mackie said, starting off as an LLC, and then as the business grows, there's more income, you need to think about, and we'll get into that later, the payroll and paying yourself payroll. Then you can become an S corp and you keep that same EIN number. It's just starting off as an LLC, filing that separate schedule. Then you can determine later on, if the business grows, if you want to incorporate with the state and be taxed as an S corp.
Thank you. And I know this is something that comes up all the time. Deborah?
Is there an income bracket that you would say transition, the amount of money per year made?
No, that would just be unique to each client.
Okay.
Yeah, usually what they decide is the expenses, not the income, because
Okay.
sometimes the expenses are limited on Schedule C.
Thank you. We're going to try to keep, if you could hold on to that until we're at the end, then we'll, I know this is a topic that comes up a lot, so we want to make sure we get to this. Now, as we go through this, and I know all of our advisors, some of the things we talk to our clients about is hiring an accountant, getting commercial insurance, getting an attorney involved, and I've even learned already this morning that we should also be talking about financial advisors. But when someone tries to hire someone to do their taxes, take care of their books, what do you guys see as some of the most important things for this? Do people really need someone to take care of their finances? I know that's a loaded question. And when they're looking for someone to help them as a small business owner, what things should they consider when they're talking and considering different people in your profession?
Well, I would say that depending on the size of your business and what your needs are, if you have third-party requirements, reporting requirements, there's different levels of professionals, and every one of them meets a need, and every one of them are good. You could have accountants that are not certified. You could have what's known as an enrolled agent. You could have a CPA. And there's different levels that each one is allowed to do. Like as a CPA, I'm allowed to appear before the IRS, as is an enrolled agent. A non-certified accountant is not. We may have different educational requirements and continuing educational requirements than those others. And I'm not being derogatory at all to people who are not CPAs, because I know a lot of great people in the business who are not. And they meet the needs of those clients, and that's fine. But as you grow, if you do grow, and as an example, your banking relationship grows with you, and the bank puts requirements on you, loan covenants, I would call it, that you have to report on a quarterly or certainly an annual basis, you may want to talk to a CPA as opposed to a non-CPA. And actually, as the bank does their risk model, they may insist on that, actually. I've been involved in those type of transitions as well. But let me assure you that the important thing is to get an accountant involved early enough. Because we're going to talk about monthly reporting and how important that is. And it is critical, absolutely critical that you understand your, what I'm going to call cash flow as opposed to monthly income and expenses, because what falls out of monthly income and expenses. So I probably said enough, so.
Well, one of the things that I think that is important when you choose a CPA, tax preparer, any person that is going to help you to get your finances in order is not only how many clientele they got in their offices, is if they are registered with the IRS at least as a tax preparer, how they talk to you about your financials. And one of the things that is important is your tax preparer or CPA needs to be partner with your attorney, if you have one, or your financial advisor. So you can create a whole financial program, a whole financial package that is going to help you in all the expertise areas that they got. And when you grow with those 3 people around you, even only for advice, that's the best way that you're going to know that you got your best CPA or your best tax preparer. When they talk to you about planning at the end of the year, when they explain you everything that is in the forms, is one of the best ways to know that you got the best person on your side.
Thank you. I know in my experience that talking to people, keeping in contact with your CPAs and making sure you have these professionals in your corners is critical, especially when something comes up and you panic and you have to call someone. Calling them is always a good idea. Now, as we talk to our clients, and being a small business owner myself, I know that I've made some mistakes over the years, none that have resulted in prison time as yet. Can you guys talk about some of the mistakes that we small business owners make and how we can stop them before we do?
Well, I would say one mistake, other than the obvious, would be developing relationships with your other professional people. I strongly advise that you meet with your banker, as an example, and that you get your banker together with your attorney and your accountant maybe once a year, if not more. Because in the example of a banker, you will need that relationship in the future if you grow. And if you don't, they're generally good people to know. Anyway, they're happy to buy you lunch, they're happy to buy you coffee. There's a boatload of them around. We got a couple in the audience, I see one I recognize. But having that relationship and letting all your professionals know who they are, I think is important.
I think also staying in touch with your accountant or CPA throughout the year. Coming into the office in February, March, and not seeing them since the last February or March, and saying, okay, well, I know I haven't been in touch. Here's all my bank statements for my business. Here's my credit card statements. Here's all my information. I hope I don't owe anything. Well, you should have really been in touch. So throughout the year, they want to help you to make sure that there's tax planning in place, and they're creating projections for you, determining your estimated tax liability, so you avoid estimated tax
And I'm going to
penalties.
tell you, it's a two-way street.
Right.
And I know that's going to sound terrible, but it's a two-way street. You shouldn't hesitate to pick the phone up and call one of us and say, you know what, I'm going to sell my building this year, or I'm going to do this, or I'm going to do that. What's the tax implication of doing that? So at the end of the year, when she says, you know what, you owe the IRS 10 grand, and you're going to sit there and have a plan for it.
Yeah, that's true.
It's a two-way street.
Yeah, that's true. One of the biggest mistakes that the small business owners do is they do things before they ask. Okay? They came over and say, oh, I got a machine. I buy it, but I don't know, they asked me for this. They require this for the sales and use tax. And to look at them and I said, why you didn't ask me before? Okay, so now the taxes are coming, you're going to have a liability, and you don't want to have the liability, but you didn't ask me then. Or they sell properties, and they buy properties under the corporation name, and then they wanna keep it as a personal, and to look at them and they say, please, ask me first what it can be the best way to do it. Another big mistake, they mix personal with business expenses. They got in the bank accounts or business accounts, they got Prada bags, they got clothes, and they told me they're gifts. Gifts for who? So all of those are little mistakes. When you want, let's say they request us a profit and loss and the banks are checking the bank statements, you don't know what are you going to put those expenses they are in the bank statements and the business account. So another thing, people don't keep. In the small business, they don't keep receipts. They don't keep the mileage. They don't know that if they use the card, they need to get an application to get the mileage that they use in the business. So all of those are little mistakes. When you are in the long run, they are bad habits, and they cause problems to the accountants or the CPAs or the tax preparers. When you guys got an audit, we are the ones in trouble to prove those expenses.
So where that comes to haunt you eventually is when you go to sell your business. And I know you're not thinking about selling your business today, but my firm does a lot of valuation work in the M&A area. And so you'll come to us and say, what's my company worth? Well, of course, a buyer looks at the past financial performance. And if you are burying personal expenses in there, we go back and adjust for that and then try to justify that to a buyer. It really comes back to haunt you when you do that. So, you know, I know you're thinking about starting up or you are a startup, but at some point you're going to want to exit as well. maybe not now, but, you know, it's at some point in your life or someone makes you an offer, those issues come into play. And then we're trying to defend, you were trying to defend why your profit was low when it could have been higher because you ran personal expenses through your company.
Yes, and another little mistake that the people do in this small business is when they don't have the records of the people who works for you, even if they are temporary, they give money in cash, they don't get the records, and they, at the end of the year, they come and say, oh, I got this, and these people, I pay them this amount. Where are the canceled checks? Where are the receipts? How I'm going to cut the 1099 if you don't have any proof? So all of those little mistakes, or pay yourself without just thinking because, oh, it's my business, I can pay myself, and don't report it because it's my business, big mistake.
That kind of leads us right into the next topic, so thank you. And you know, and we talk to your advisors, you know, that we look at you and we tell you have to do these things right to begin with. And sometimes we forget, sometimes we don't know, but unfortunately, the IRS doesn't care about the not knowing part that much. And all these things are important, and especially talking to these people right away is critical. Now, we talked about employees and paying them, and one of the things that comes up a lot is having a contractor, a 1099 employee, or a W-2 employee. What's the difference? How do they pay them? What are the tax implications? And I know Maggie, you kind of brought this up initially. Can you talk to us a little bit about employees versus contractors versus 1099 and what people should do and maybe how you see it going wrong sometimes?
Well, there is different kinds of employees. Not necessarily they need to be W-2. You can be an employee being paid with 1099. The differences are the person or your boss, your owner, give you the materials, give you the everything to work, then you're not considered a self-contractor because you're working under is your employee. The only thing, you're paying him 1099. When there is a self-contractor, to my knowledge, and probably not correct 100%, but when you are a subcontractor, is when you offer a service to a company and they don't provide you materials, they don't provide you with anything, just do the job. You are in charge to have your own insurance, you are in charge to have your own EIN, you are in charge to have your own payroll taxes. When you are a W-2 employee, you got 4 deductions. They are actually, to my point of view, saving boxes. You save for the federal withhold, you save for the state withhold, you save the amount for your Social Security and for your medical. So when you are at 1099, you don't save any of those boxes, so at the end of the year, you are required to pay 100% of the Social Security, 100% of the medical. Meanwhile, when you are a W-2, you got the benefit that your employer is paying half of the Social Security and half of the medical.
Yeah, I think from a business owner's point of view, when you're deciding whether someone that's working for your company, doing work for your company, whether you decide if they should be a contractor, an employee, the biggest thing is, like Maggie said, it depends on the level of control that the owner of the business has on what that person's doing. Is the owner of the business providing the material, telling them when to show up, providing insurance to cover whatever work they do? Or is this individual coming in and they already have their own insurance, they're telling you when they're going to come, they're available at this time, maybe they do work for other companies, then they would be a 1099 or subcontractor. At the end of the year, the amounts that you pay them would be on a 1099. If they're under your level of control and you're treating them as an employee, you're telling them when to come in, I need you these days. Like I said, your insurance covers them, you're providing them with the materials, you have control over their work, they be an employee, and then they get a W-2 at the end of the year.
So I would just add in closing about this issue that, given the area we live in, we have a boatload of trucking and logistics companies, and that's an area that I see this abused big time, where they want to treat their employees as contractors, and it's simply not the case in a lot of areas I see.
Now, and sort of along the same lines, we're talking about employees, we're talking about taxes, we're talking about all the things that bring us joy as small business owners. When it gets to monthly reporting, this is another thing that as a small business owner, when I started, I was talking to my accountant about this because I didn't know what to do. You figure, at the end of the year, you pay your taxes, but luckily they told me the truth. Can we talk a little bit about monthly reporting? As a small business owner, when I come to you, I'm like, okay, I'm going to start my business. What do I have to know about paying my taxes? Are they monthly? Are they quarterly? Do I just come to you at the end of the year? And I think you talked a little about what can go wrong. And even sales taxes for those of us that I don't sell a product, but a lot of our clients do sell products. So how would they look at these monthly reporting requirements?
Well, usually when they are, and when you know that you're going to be a 1099 employee, what I recommend, because usually it's hard for the people to get and do monthly or quarterly payments, what I recommend my clients, and I explain to them, Social Security is going to be 12.40% taxes at the end of the year. Social Security is going to be 2.9% at the end of the year. And depending on your total gain, you can be in the bracket, usually in this area is between 10 and 12% taxes at the end of the year. And it is important that your tax preparer or your accountant explain to you what is your bracket, your tax bracket that you're going to pay last year, so you figure how much is going to be approximately this year. So when you make the sum, you're going to see that it is around 25%, okay? So I suggest my client, that is going to be for the gross, for the net. But if you're going to save, and you don't want to make any monthly payment or quarterly payments, open an account just for that. Save 20% if it is possible. If it is not possible, at least 18 or 20%, or whatever is your gross at the end of the week, every 2 weeks or every month. So at the end of the year, when you do your income taxes and you're going to pay the 20% in your net, you're going to have the money saved already without sending payments to the IRS or to the state. That's why I'm suggesting to my clients. There is another ways, yes, file properly, monthly or quarterly, but that require to pay us to do those reports. And sometimes a small business doesn't have enough money to visit us every month or every quarter.
Yeah, depending on your business structure, you will have different filing requirements, and you'll have to pay taxes at different times. And we could talk about that all day, but I mean, if you're a sole proprietor, you're going to be paying your taxes quarterly and making quarterly estimates. That's so you're getting enough tax paid in throughout the year that when your tax return is filed, you don't have a large tax liability because nothing was paid in. You're not going to get hit with an estimated tax penalty because you didn't have enough paid in. If you're set up as an S-Corp and you're paying yourself through W-2 wages, you may be paying taxes in either monthly, quarterly, monthly or quarterly, just depending on how much payroll you have. There's certain limitations, per quarter you have more than $50,000 in tax liability, then you're going to be paying it in even semi-weekly. So it does depend on your business structure, how you're developing as a business. If you're moving on from sole proprietor and you're incorporating and you want to be treated as an S-Corp and you're filing a corporate return at the end of the year, then you're looking into quarterly payroll tax filings and paying in those quarterly payroll taxes semi-weekly, monthly, or quarterly.
So the only thing I would add to that is, as we talked about this quarterly estimated tax payment 4 times a year, what is it, April, June, September, January. I have clients that aren't disciplined enough to do that. And so when they get some money in hand, whether it's February or July, I encourage them to send money to the IRS sooner than later. The IRS will take your money whether you send it to them now or later.
Yeah, they don't mind getting it
There's no
early.
magic about the dates.
No.
What's magic is you pay enough before that date, so that there's no underpayment penalty. That's all I would have.
I just want to add something about the sales taxes. Sales taxes is when you resell, you keep the taxes and save them. So at the end of the month, quarter, every 6 months, every year, depending on what the states require, you're going to send them. But one thing that I would like to add is every business that is going to do resale and is going to have sales taxes or ST1s, for the first year, they're going to pay it every month. After the year, the state is going to decide if your income is enough to do it every month, every 6 months, or every year.
Thank you. As you can see, this is complicated, so this is why you need somebody that knows this stuff. I know as a small business owner, this is one of the things that you know frightens me every month. About 2 weeks ago, because the taxes are due, and you know whether or not you have the money, as these guys are all saying, the IRS wants money. Now, if you have cash flow issues in your business, and maybe you're very lumpy cash flow, you have a lot of money at one time of the year, not another, then make sure that you're getting them their money so they can take care of things. And talking to people like this is why you need, it's why you need to talk to them so they can keep you on track because you don't have any surprises at the end of the year. I kind of skipped over one bullet to get to that one, but it also involves employees. The state of Illinois now requires every Illinois employer with 5 or more employees to offer either their own retirement program or a program through the state called Illinois Secured Choice. And it's new. It's not unlike some other new laws that have come along. And I just wanted, if anyone can jump to kind of tell us a little bit about this and how you're suggesting that your clients handle this as they are working through this new law.
It's really hard if you don't.
I don't have a lot of knowledge in this area. It's relatively new. You don't have to be an employer, from what I've read. Individuals can start.
Actually, for the first year, when your business is less than a year or 2 years, you're not required to have this kind of plan. But if your business is more than 2 years and you got more than 5 W-2 employees, you are required by the state to offer a retirement plan to your employees. But the thing is, not necessarily they need to accept it. You need to offer them, okay? And if they accept it, you're required to offer one, and you're going to work with your financial advisor, the best way to do it, and if, that is important. And if you don't have more than 2 years, more than 5 W-2 employees, you don't need to worry about it. The most important thing is you need to offer it, not that they need to accept it, okay?
Yes, you just need to offer a plan. It doesn't have to be Illinois Secure Choice. That's the other reason why it's important to work with a financial advisor, because the financial advisor can talk to you about your different options and different plans, retirement plan you can offer to your employees. They'll also guide you based on the different retirement plans, whether it's a SEP or a simple IRA, what the cost would be to you, how much you're required to contribute to your employees' plans, how much they can contribute. So working with them is the best way to go, learning about the different plans, and they'll even give you more information about Secure Choice. But Secure Choice is more of a basic package. If you're not working with a financial advisor, you just want to have something out there to offer them. This allows employees to participate in a retirement plan through the state and put a certain percentage of their check into that plan where the employer doesn't have to put anything in to match or anything like that.
Matching. Yeah, it's more simple and right now economic for the small business.
Thank you. there's so many things as a small business owner you get involved in that you either didn't know about, didn't want to know about, don't want to get involved in, but things change all the time, which is reason to talk to professionals like this, keep in touch with them, because things are changing all the time. And one of the things as a small business owner, as soon as we start this, even before we start it, we have expenses. We're buying things, we're getting ready to build, we're getting ready to start our business, we're starting websites, we're doing things, and so we have income and expenses certainly, and God willing income as things go along. So when they come and talk to you and say, listen, I'm starting a business, I'm gonna have this kind of business, I've already got expenses, how do you advise that they track these things? That is keeping receipts, using software? What's the best advice you give your clients, and how do you like to see them handle it as they work through their expenses from month to month?
So to Maggie's point earlier, we always recommend that you open business bank accounts. We recommend that you open business credit cards and that you monitor them on a monthly basis, that you reconcile your bank statements on a monthly basis to give you a good foundation, and not talk to your accountant once a year. I've heard this comment from a number of people over the years where, you don't call me, I show up once a year, I drop a box off, I show up to pick up my tax return and a bill, and that's it. Well, then let's sit down and talk about it. What do you feel like you need? What can I offer you to help the process be a little smoother? And that's led them to, again, based on the business, quarterly or semi-annual meetings, and we set those up in advance.
One of the things the LTD suggests to our clients is everybody knows which ones are the expenses for our own business, which ones are the kind of incomes that we have. So if you don't use any programs like QuickBooks or any of those because they are expensive or you don't know how to use it, it's good when you made a spreadsheet with all the incomes, all the kind of expenses that you do, and every month, it takes a lot, the discipline to do it, but every month, take all the statements for your bank accounts, business bank accounts, credit cards, bank accounts, and get it in the correct categories, and you divide your expenses every month, and call your tax preparer, your CPA, and ask them, is this okay? Is I track all my expenses, I spend this and this, and these are my mileage, and these are the jobs that I did, this is how many jobs, how much they pay me, and at the end of the month, you're going to see how much you are spent, how much were your income, and it's an easy way to, at the end of the year, get your financials. Usually, we do this when they are a small business, not too big of a business, nor as corporations, but it's help for the small business when they start.
I would advise to work with your accountant and have the level of involvement that you want. I have clients that are extremely hands-off. They don't want to open QuickBooks, they don't want to make a spreadsheet, they don't want to do anything, and that's fine. You can provide your business bank statement and business credit card statement to your accountant each month. They'll do the work, they'll prepare a financial statement, they'll let you know where you're at, profit or loss-wise, and give some guidance. Other clients want to have more involvement. They want to do some of that work. Maybe they have QuickBooks Online where they can go online every month, import their transactions from their bank account and their credit card account, and see for themselves where everything is going, categorize everything, and look at financials based on information they've entered into their own accounting software. And then at that point, the accountant would go in monthly or quarterly and make adjusting entries as needed and provide guidance. So it's really up to how much involvement you want and what you want to do. If you want to be hands-off, or if you want to do more of the work and just have the accountant review, make those adjusting entries or provide guidance each month or each quarter.
So by far, what we see in our client base is QuickBooks Online today. And assuming you see that a lot too. In fact, we've we've turned down work from people who won't use it or have an archaic system that doesn't seem to serve their purpose or ours. So QBO is big in our business.
Right, and the nice thing about that is some accountants do provide a wholesale discount. So if you are thinking about working with an accountant, talk to them about using QuickBooks Online or whatever software you want to use, but what you see on QuickBooks website for the price of the monthly fee of what QuickBooks Online would be, usually an accountant can get that at a discount. And the nice thing about it too is when you log in, you see in real time exactly what your accountant is seeing. It's all on the cloud, so there isn't the need for, if you use QuickBooks Desktop, to get a set of financials and then making adjusting entries on your end because you have the desktop version too. So that's a great benefit with something online on the cloud.
Yeah, those are good. The we think most of the small business in the area don't come with the economics sometimes to do that. Or like my clients, some of them are old people, not old people. Who doesn't want to use computers or programs.
Experience it.
Yeah, so we still have people who turn us Microsoft Excel spreadsheets, absolutely, and we get that.
Now, as the hands-off person, I know that with the account I've been working with for years, they sort of took the hands-off approach. I do everything through my bank account. They just take the information and they send me a profit and loss statement and balance sheet. But if someone if you said, listen, I want the perfect client. When they walk in here, I want them to listen to me and do what I say. What would be the recommendation? QuickBooks Online, would that be the ideal? Or would you prefer just someone that says, listen, I want to be hands-off and I'll let you get my bank statements and take care of the bookkeeping and everything myself? Or is there a perfect way that you would prefer?
The perfect way is the one they use and will use.
Okay.
But we recommend QBO, QuickBooks Online.
Okay, thank you. And for those of you just starting out, I know myself, when I started out, there was no QuickBooks Online then, but there were computers, just for the record.
You use Quattro Pro.
Right, exactly. But there's a lot of ways to do it. Just do something and talk to your accountant. They have a lot of good ideas. They really do. They're not scary. Look at them. They're lovely. So talk to them and have these conversations, because again, you don't want to have we talked about one of the nightmares I had of you get a tax statement and you're more taxes to do than you have in your bank account, and then you don't know what to do. You can't leave the country because it's too late, and so you actually talk to your accountant and they will help you through a lot of problems. But having a relationship, having a conversation, being involved with them is really the best way to do it. We talked about this a little bit at the beginning, but I'd like to revisit it because the whole notion of filing taxes, depending on what you are, is something that comes up a lot. We talk about LLCs a lot in our little world. In most of our clients will start out as sole proprietor, as LLC. That's kind of the way we direct them. When I started 22 years ago, S Corp was the way to go. There was nobody talked about LLCs back then. But can you talk a little bit about how personal taxes are handled? I know you talked about it briefly before, but with each of these, specifically LLCs, sole proprietorships, and then S Corps.
So we did talk about the LLC's avenue first. So with an LLC, you can be taxed a variety of ways. If there's that single member LLC, there is no separate corporate or partnership return. You are just reporting income and expenses on a separate schedule that goes with your 1040. If the LLC has more than one member, you by default are treated as a partnership, and you're filing a 1065 partnership return at the end of the year, unless you elect to be treated as an S Corp. Then you're filing an 1120S S Corp return at the end of the year. Both the partnership and the S Corp are flow-through entities, so there's no federal tax being paid at the corporate level. Any income that company is reporting will flow through to your personal return and be taxed on your personal return. So it's basically the LLC, and we did touch on the sole proprietor. That's if you just you do nothing. You're automatically by default just a sole proprietor, even if you don't have a business EIN number. You just start a business, you're getting some money coming in, paying some expenses out, you report that on that separate schedule with your 1040.
Right, thank you.
And I don't know if anybody want to talk about S corps or C corps. I know we talked about that a little.
We talk about it a little. The most important thing, one of the most important things to the entities is when do you file taxes. When you are a sole proprietorship or a LLC, single LLC without any election, you file taxes as a regular 1040, and if you owe taxes, the date is April 15, like every year. When you are S corporation or partnership, you need to file taxes on or before March 15. And if you are C corporation, you file taxes in April 15. Obviously, if you are a fiscal year, from January to December. So when you are a LLC, but you took the election to become S corporation, you take the date of March 15.
All right, thank you. Yeah, that was kind of a hard stop for the first year. I had a corporation, and then taxes were due a month earlier. That wasn't what I was planning on at that time. But I should have talked to my accountant sooner, because really the key. One of the things in EBC, we're blessed. We work with a wide variety of different clients, and some of them are new to the country, not yet U.S. citizens, but starting small businesses, and these topics still affect them. They still have to handle all these different things as entrepreneurs and handling with their employees. Are there any accounting topics that are specific to people that are not U.S. citizens they need to handle in filing their taxes each year?
Actually, yes, that's why the IT number exists. And the IT number is one of the most important tools for the people that are non-citizen or non-residents. They can open businesses as a regular social security. The only difference, instead of getting the EIN instantly in this right second after you file, you need to wait between 7 to 10 days to get your EIN, but you can be any entity. You can be a sole proprietor, you can be S corporation, LLC, C corporation, any entity that you wanted it, you can be open with an IT number. They pay the same taxes as everybody else. Usually, they don't have the same credits, but they have the same taxes. They can open business, work with any company legally because they got the EIN.
Thank you. Thank you. Now, one of the things that small business owners, whether you know it or not, you've been given a new task this year to file something called the Beneficial Ownership Information Form with the federal government to prove that you're not laundering money through your small business.
Could you repeat that again?
It's called the Beneficial Ownership Information Form. And it's something you need to file, is it by January 1st, I believe? Yeah, that's shaking, yes. It's shocking that I asked my accountant about this a long time ago, and they took care of it for me, so that was. But that's actually what we want to address here, because it's something new, it's very important. The government wants to make sure that no terrorist is using a small business as a front, to launder money. So this is a form that needs to be completed by every small business owner. And so if you guys could maybe address that. Do you guys handle that within your organizations, and how do you recommend that your clients do this?
So FinCEN stands for Financial Crimes Enforcement Network, and it has been around for about 35 years, but it's just come into the limelight with this BOI reporting requirement. Prior to that, there was something called an FBAR reporting, foreign bank account. If you had $10,000 in a foreign account at any time during the year, you had to file this FBAR report. This BOI report is a little bit different in that, and Jeff just referenced to it, it really comes out of trying to track, if you will, cash flow in support of a domestic or international terrorism. And so it is due by January 1. There are certain regulated industries that are not required to file. Insurance companies, banking companies are not required to, but the far majority are required to do it. It's a fairly straightforward report. I've done maybe 3 of them. I know we were talking earlier, you've done a couple. I don't know how many you've done, Mag, if you've done any at all. But depending on how we wish to deal with it, in my particular case, it's not a service that I do offer to my clients. We've done it for 3 of them, only out of pressure, if you will. Typically, I refer them to their attorneys to do that because it is more of a legal reporting document than that. So that's kind of where we stand on it. I don't know where you guys stand on it.
Yeah, there's nothing that says you can't do it on your own.
You can.
I choose the route of having them do it, then I have somebody to blame. It's me. We're going to get the questions in just 1 second with one more topic that we just want to touch on. And as a small business owner, we think about the beginning, we think about all the excitement, we never think about necessarily, down the road a little bit. But as you get farther down the road, then you realize there's things you should have probably thought about when you started. And so it's planning for the future. And so, and this is one of the things that I know that May has some specific experience in, and this is talking about planning for the future. And as a small business owner, you're using Social Security is not a retirement income necessarily, but a supplemental income. So can you talk a little bit about what your experience is with this topic and the importance of working with both an accountant and a financial advisor in this area?
Well, actually, everybody knows with the years the Social Security has become a little bit more as a supplemental income than as income when we are in the retirement. So we have a lot of young clients, young company owners. We're working with them because when your CPA or your tax preparers work with the financial advisors, we get the tools to get the financial stability at the end of your life. Starting young give you more opportunity to save money with the IRAs, with the a lot of programs that the financial advisor has. They help you to grow because getting old is expensive. Getting old means sickness, hospitals, food, and the Social Security is not enough anymore to survive. So the retirement plans and have a good insurance, no life insurance, but retirement care is going to help you to survive at the end of your life with enough money. IRAs, Roth IRAs, they are the best way the employee or employers can help to get a good retirement. One of the most important things is if you don't have an advisor, talk to your bank. In the bankers, they got people, they help you to set up the IRAs, help you to see what is the best way for you to save money. Talk to the insurance companies, they're going to help you to get a financial stability. So there is so many ways to save. And like an employer, you're going to have the benefit to get the expenses in your income tax and help your employees and help you because they are tax deductible.
Thank you. And this, as someone who's had a business for a long time, and I will admit that I thought more about the near term than the long term then, these are the kind of things you can't really talk enough about, especially as a small business owner. This is all your responsibility now. This is something, you're starting a business, but you're the corporation now. You're the LLC. You're taking care of not only selling things, but also paying your bills, paying your salary, and planning for your retirement. So working with professionals like this to get advice and actually act on it is critical. So we're going to open up now for questions. I know there were some hands previously. Deborah's going to be working that side of the room. I'll work this side. We'll get you a microphone. And please ask these guys whatever you think needs to be asked at this time.
Good morning. My name Mark, I had a question about the BOR report, and I was wondering about, like, what about the LLCs and the states that are anonymous? Would you still have to file the report or no?
I'm sorry, I couldn't understand the question.
Like when, like if you file for LLC in like Wyoming or not, then like the ownership is anonymous, right?
In some cases.
In some cases, right? So I was wondering, like, in those cases, would you still have to file the BOR report?
I don't know about Wyoming. I would say Illinois, yes.
Right,
You
right.
would. And just because you name your LLC something other than your personal name, which is one of the benefits of an LLC,
Right.
that has nothing to do with the requirement of filing a BOI, as I understand it.
Okay.
Unless there's an attorney in the room. And that's definitely a question that if, since that seems like a good question to ask your attorney. If the purpose was to be anonymous, I don't know that there's gonna eliminate you from having to file that report, but certainly a question for.
No, because the intent is to disclose.
Exactly, yeah, that they want to know who everybody's doing, what they're doing with that money.
What if it's in a trust though? Like a trust fund or something?
That's still a good question to ask an attorney, because it's something you don't want to find out later. You want to know earlier. I would definitely ask an attorney that question.
Hi, I'm Janine Mosley, Another Solution Promotions. I want to know, do I go to the IRS to get that business ownership form?
The BOI form, it's online.
It's online.
You can go to irs.gov
And get
and it will be online.
Or FinCEN too, if you search FinCEN.
We'll email that out.
Yeah, we'll make sure that we'll email that out after this. Make sure you have it.
Hi, great panel, everyone. So my name is Samantha. I work for the Joliet Latino Economic Development Association. Maggie is one of our members, and we work closely with the EBC. We're great partners. And at LEVA, we offer technical assistance to complete the BOI. If you guys need to complete the beneficial ownership information, we can definitely help you out. So our phone number is 815-200-1065. So you guys can give us a call and schedule an appointment for technical assistance, and we do that at no cost. 815-200-1065. Thank you.
But there is a significant penalty for not filing.
Yeah.
Thank you very much. You are going to have a line.
For the whole year.
The lady in pink.
There you go.
I don't need a mic. I have a question to avoid.
Just so everybody else can hear you too.
My name is Deanna Trammell. I was listening to you when you said mixing personal and business funds together. What is the proper way if I need to use business funds like right away? What's the proper way to do that quickly?
If you need the money, let's say today, because you're going to make a purchase, pay yourself as an income. So yes, at the end
Like
of the
payroll or something?
actually, you can pay you in cash, but that is going to be a 1099 NIC.
Okay.
You're going to pay Social Security, Medicare at the end of the year, but it's going to be as if you pay yourself in cash. Unless it is expense that is going to be for the business, then you can use it as a business expense.
In some business structures, you can't pay yourself with a 1099. Are you asking about using business funds to pay for business expense, or you don't have enough
personal
business?
expense? Because as a small business owner, that money, I have to use it.
Right.
So how do I properly do it so it's not negatively?
And that, I think that would require a sit down with your accountant, because it depends on your business structure too. Taking money out, if you're an S corp.
I'm an S corp.
Okay. So you can't pay yourself as a 1099.
Okay.
So taking money out will be one of two ways. It'll be a payroll to yourself or a distribution to yourself.
Okay.
And that was something that we didn't talk about. Taking money out of an S corp is fine. but only taking it out and considering it a distribution to yourself and not taking it as salary and not getting a W-2 at the end of the year
Okay.
raises red flags with the IRS.
Okay.
You're evading paying Social Security and Medicare tax if you don't have yourself on the payroll. There's a whole issue, it's called reasonable compensation based on the business and business income, how much you should be paying yourself as salary
Mhm.
and how much you should be taking as distribution. And that's unique to each business and it's unique to how much work you're doing for the business. I mean, there's a lot involved with that, but
Yeah.
I mean, taking it out as a distribution and is fine. That's not reportable, you know, as a 1099 or as a W-2, but you do have to be careful. Speak with somebody about how much you're taking out, so some of that can be considered wages. And the W-2 is then issued, and payroll taxes are paid in on that.
So if I had to take, I need money today, I need to pay, I own a business, I need to make my car payment.
Right.
Is that a good?
Right.
I need to make my car payment, so this is, I'm gonna take $500, I'm gonna write a check to me, I'm gonna write a check to Jeff for $500, and out I go. Now, would it be good for me then to call my accountant and say, listen, I just took $500 out, and I gotta admit, when I do that, my accountant will then call me later and say, hey, what was this $500 for? And I will tell them, and then they will take care of it, whether I consider it payroll or distribution. I just tell them, you just do whatever you need to do with the taxes. But just letting them know is critical. Now, I wanted to kind of build on your, because I know this notion of salary and distribution is something that comes up a lot. For those of us with small businesses, is there sort of a baseline? I know that businesses vary wildly, so let's just talk about a typical small business that, you know, is a salary like I'm paying myself $75,000 a year. Is that enough for the IRS to be happy, or does it need to be 30? Or is there anything that's going to set the big alarms off with the
Are
IRS?
there any IRS agents in the audience?
Right. There's no set rule. There's no 60-40 or 40% is distribution, 60% is salary. I mean, there's nothing set like that. A lot of it depends too is how profitable is the business and how much are you taking out. You know, if your business at net income, you have $100,000 and you took out $1,000. No, that doesn't need to be salary. I mean,
Right.
what you take out is not very substantial. Your business made that much and you take it all out. Can that all be distribution? Absolutely not. Some should be considered salary, some is a distribution.
Another reason to talk to your accountant.
Right or wrong, over the years, we've recommended a minimum 50-50 split.
Okay.
There always has to be some W-2 compensation.
At a
It
minimum.
can never be zero, never. Or you're just inviting trouble. The only comment I will follow up with on distributions is there's something called basis in an S corp. And if your distributions exceed basis, it becomes a taxable event to you. That's always a surprise to me. But it can be. That's why it's another reason to call your accountant and say, hey, I need $100,000 to do this, and I'm going to take it out of the company in the form of a distribution. And you look at the historical numbers, and guess what? You've only got 75,000 basis left. You've all of a sudden picked up $25,000 taxable income. That's always a surprise.
And as I asked when I started the business, all these people like, oh, you got a business now, you got all these write-offs, you're gonna be all set. And so I said, so can I buy a jet? And they're like, do you have to pay for it? I'm like, well, what the hell is that in business for then? If I can't write all this off. So talk to your accountant, talk to your accountant, talk to your accountant. Keep them informed, because again, surprises are not good. Who's next?
Hi, my name is Libby of Libby Soaps and Candles, and I'm a home-based business. And I'm considering switching over from a sole proprietorship to an LLC. Would that be, if I understand correctly, what you said earlier, I wouldn't have to change my EIN number? I wouldn't have to apply for a new one, I keep the same one? Is that correct?
That's true.
Yeah, when you pass from the LLC to S corporation or partnership,
Sole proprietorship to LLC.
So proprietor to LLC.
Do you have a retail business? Do you have people come into your home?
Those that I know, yes, I do. My house is basically like a warehouse. It's set up where people can come in and pick what they want.
I'm just trying to think of the liability issues related to a business like that, and whether you have a real need to be an LLC. Because there's cost associated with being an LLC, although that cost has come down from $250 a year to $75 a year now, I think, in Illinois. And there's an annual report requirement.
Say that again?
There's an annual report requirement too in the state of Illinois.
Okay.
And so, again, you can do that on your own, or you can pay someone to do it. We don't do any, in our case, we don't do any, but for some accountants, that's a source of revenue.
Okay.
But I would talk to your accountant or talk to your attorney and say, here's my business. What do you think is the best type of entity to protect my personal assets?
Okay.
And if the two of you decide that a sole proprietorship, not an SM sole member LLC is adequate, then you don't need to do it.
Oh, okay. You don't need to do the LLC?
You don't have to do it, no.
Okay. Hello, my name is Jerry. I'm the owner of Jerry's Kitchen and Tables. I'm a soul food person. And I had the same question as her, and another question about you said a personal account, business and personal account. I've been doing it for years. So now, if I brought you my things out, how would I get to decipher this out once I finally get an account for the tax purposes?
Are you saying that you're commingling personal and business
Yeah.
expenses?
Mhm.
If you have a separate bank account?
I have a business account, but I've been using my personal account as well to run my business.
If you can run everything through the business account going forward, that would be the best thing, but since you've already used your personal account, taking receipts and taking everything, a spreadsheet, or putting down everything that you have purchased for the business with your personal funds, so your accountant or whoever's preparing your tax return knows that what they're looking at in your business account or with your business credit card statement doesn't include all of your expenses because you've used personal funds. Don't forget to provide that to your accountant. Jot them down.
So you're a sole proprietor. Are you a sole proprietor right now?
Mm-hmm.
Okay, so she's a sole proprietor and you're thinking about switching over to an LLC.
Mm-hmm.
And based on the risk of a catering business, so there are risks that you would probably want to talk about with people getting sick or something and people coming after your personal assets, say they got food poisoning from eating your food. To me, that would be, we like to advise our clients of risk. What are the risks you're taking, and then the financial structure of your business. And so if you're thinking about switching over, really getting a good assessment, whether with an attorney, and then the accountants to help you kind of separate the business and the personal.
And the risk to you is that if you're typical of people like that I have met along the way, you all have good intentions. What happens is in November, you look back for the last 10 months. And if you can remember what you did in January, you're really a good person. And what you risk is losing a deduction on your tax return. That's what you risk.
Couldn't it, like, if you wanted to use your bank statements and go run through there to see what was what, and there, would that be helpful as well?
If you are disciplined enough to do that, but my experience tells us the majority of people are not.
Okay.
Keeping track of things, and I know as a small business owner, the way I've always approached it is I either have a business credit card or debit card, and I just use that for everything related to my business, and that way I can't screw it up. I use the business stuff for business stuff only, but I also understand that, especially in your position as sole proprietor, I had to buy something today, so I had some money in my purse, so I bought it. But then keeping track was the hard part. But again, I think, sort of the mantra is sit down with an accountant and talk to them about it and get it right going forward, because you don't want to have it wrong going forward.
My name is Kurt Askew. I am the owner of Uncle Booker's Barbecue Food Truck. And I started a food truck in September. And now I need some help. So today, I hired somebody, but I cannot seem to find online how to sign up for his tax deductions and Social Security deductions and all of that. Is it Is it possible to do it, or is that something that needs to go through my account?
I think it'd be easier to go through an accountant. You're gonna have to have your employee fill out 2 federal and state forms for employment, if they haven't already. And on those forms, W-4, Illinois W-4 is where they're electing, basically how much taxes they want withheld from their gross pay. And then it's gonna be up to you to make monthly, semi-weekly, quarterly payroll tax deposits, paying in that Social Security, Medicare, the federal withholding and the state withholding on behalf of your employee, and then there's quarterly payroll tax returns that need to be filed. If that's something that you think you want to take on, sure, you can do it yourself. If it's a little overwhelming or you just don't have that experience, you want to use an accountant, I would suggest calling somebody.
A question I would have then to piggyback, when a small business contractor versus a W-2, how do you know when you need to switch over and actual go to payroll versus someone working for you as a contractor?
I think the biggest thing is that level of control. Like I was talking about earlier, are you dictating when they come in, what they're doing, what materials they're using? You have insurance to cover them, or are they separate? Like you own a truck business, you want someone to paint your truck, so you have a painter come in. I mean, they'll likely be a contractor. They bring their materials, they schedule you on their time. Maybe they have their own EIN number, they're not your employee. So it's the control is the biggest thing.
The argument I get into with my trucking clients is, does your driver have a separate entity? Can they give us an EIN? Do they send you a bill every month? Do you tell them that they have to work 8 to 5? If you call them and say, hey, I need you to do a run for me tomorrow, and they say, no, I don't want to do it, then that's okay. It really comes down to control. It really does. And other than this issue of compensation versus distributions, it's a hot area, hot topic, and it's got a lot of attention lately.
Hi, my name is Shay, owner of Shea Butter Arts. The question I have is regarding mileage. If you do standard routes for business purposes, certain stores or whatever that you have to go to, but you never kept track of the mileage. But let's say we have all the receipts of every transaction. Can you then do an approximate amount using a mile app, or do you need exact? And does it have to be backdated, or is it something that has to be moving forward because it has to match like gas prices or anything like that when you're tracking your mileage for your tax purposes?
Did you use your car for personal uses too?
Yes.
That is a little bit of
So if you can deduct business mileage or actual expenses.
that's what I wanted to tell you.
If you're deducting actual expenses, then you'd need receipts for every time you got gas. When you use that vehicle for business use, you pay for tolls, repairs on the vehicle. If you're also using it for personal use, it determines then how much of the mileage was business and how much was personal. Taking that percentage of business use and applying it to all of your actual expenses. But yeah, if you decide to do the mileage avenue instead of actual expenses, you are going to use an app or a log and track how much you've actually driven your vehicle for business use. When you come up with the total miles that you've driven your vehicle that are applicable to using it for the business, you take that mileage by a mileage rate, and that would be how you get your deduction. So to your question, going back, if you didn't save receipts or you didn't track mileage, did we determine if there's any agents in the room? No, if you can reconstruct it as best as you can, or if you know, I run to this store to pick up product twice a week, every week. Going back and creating that log would be a good idea.
Not that I've ever done this, but you can just use Waze. It'll tell you how far you might have gone.
So history.
Does Waze keep it? No. It doesn't keep history. And neither's your car that I know of. Although I think on NCIS, I think they get that off of the GPS on the car.
If you're ever audited, the IRS is going to want to see a log.
Yes.
Do they know when you wrote down those miles? If you did it at 5 o'clock every single day? Or if you, oh gosh, I didn't do it for the last 2 weeks, let me get that in there, I have a good idea? No. But if it's a detailed log, that's what the IRS is going to look for.
Yes, and one of the things is even if you use actual expenses, you need to keep track of the personal mileage and the business mileage, because when you use the actual expenses, like she said, you're going to use they're going to take only the percentage that you use the car as a business. The personal is not going to be considered. So if you use your car 60% and for personal, they're going to take only 60% of the actual uses, actual expenses of the car. And you cannot use both. You use either one.
One approach that my accountant suggested when we started our business is that each month or each quarter, we make a little short spreadsheet that shows, here's where I went to, if I went to buy art supplies, I was going there, this is the date, this is where I went, here's how many miles I drove, and then it's a little spreadsheet that says the IRS, the rate is 65 cents, and then, so this many miles was 20 bucks. And so every month, we essentially take out a petty cash, pay ourselves for the use of our car, and then tell the accountant what we're doing. It was a business expense, and then we move along. So we get reimbursed for the use of the car personally, and that's how we've been handling it with our accountant. But if you do it monthly or do it at least regularly and put it in a little spreadsheet, at least you have a record of what you did and when you did it.
And they have apps that do all of that now. Download it on your phone.
She's calling me out on mine.
Good morning. My name is Johan Sanchez. I'm a relationship officer for First American Bank. And I just want to give a little bit of the banking perspective, and I want to validate, obviously, the great advice by the panel. You know, I deal with business customers starting from 0 to 50 million in sales, and one of my top and favorite answers is that you ask your accountant. I ask that like about 10 times, literally in every meeting, because they can give you great advice. We also have to remember they only deal with your business, they also deal with your personal needs. So I just had recently, last month, customer deposit inheritance of $500,000 actually into an account. And I'm like, do you ask your accountant? And I just, just to kind of give you advice, they're like, no. And I'm like, I highly recommend that for you to talk to your accountant. They came back immediately the next day. They actually moved the money because it was going to cost them $200,000 to put that money in that account. So one quick conversation made a $200,000 impact in the customers. It was from different venues. I'm not an expert, or the experts that you ask them the question, but it is very important. My most successful customers are the ones who are engaged with their accountants because they have the same goals, they have the same mindset, and they know where you want to go. So I just want to kind of advise that. So really have a relationship with and engagement with your accountants. Thank you.
I have a question for people that are nonprofits. When are you really a nonprofit entity in Illinois, even though you can go on and register as an NFP? When are you a legitimate nonprofit organization?
I don't work with a lot of nonprofits, or I have a couple small ones, but I did not organize them. They came to me already with a nonprofit status.
We work with them, but for what we do, we understand is when the state approves you to be a nonprofit, even if you open your EIN or your all the numbers, you need to wait for the approval, and you got 1 year to be approval after you get the EIN. If you don't get approval, it's not a nonprofit.
Thank you.
All tax questions are answered? I don't think so.
Hi, my name is Wendy Bean. Just starting out, so do you have any advice or guidance in finding an accountant? And do you need to find one who kind of specializes with small business, or any accountant can probably handle it?
A referral. If you know other small business owners that use an accountant that they would refer to you and recommend, that's where I would start with a referral. If you are calling a couple and trying to get a sense for if they'd be a good fit for your business, ask them if they work with small businesses. Do they do a monthly bookkeeping or accounting? Will they provide financials, sit with you during the year and work with you for doing tax projections? I think that would be a base to start.
I also encourage prospective clients to meet. I like to meet face to face. I truly believe in what my gut tells me. And if I'm not comfortable with you, or you're not comfortable with me, it's a two-way street. I would not suggest that you pick that individual, or I pick you. I don't want to give you the impression that I said no a lot over the years, but I haven't. But, you know, I've been around the block, so to speak. I have that experience level. And so I've had people in town approach me to do some work for them, and just because I know who they are, I have avoided doing work for them. And when I have to do their work, they'll tell me, and I will suggest that they stay with them, because they have a history, and in most cases, they haven't been audited yet. And so, you know, until you get your hand slapped to the mileage issue, or the distribution issue, or the 1099 issue, you know, you always say, well, I've done this for all these years and I've never gotten in trouble. Well, that's true. But the one time you get in trouble, it could be really, really bad. And you don't want to have to put yourself in that position.
Because it is a relationship, and God willing, a long-term relationship. So you want to have somebody you're comfortable with. It's no different than...
You can talk to your banker, you can talk to your insurance person, you can talk to your registered investment advisor. You can get a referral. You know, I've had people say to me, do you work with someone that does what I do? Well, sometimes that's true, sometimes not. If I do, they'll say, can I speak to them? Well, once they authorize me to give your information, yeah, they do. But in this area,
Asking your financial advisor or banker.
in this area, you're going to find a lot of small, you know,
That's
companies like ours that are going to work with you.
So a question would be for you all, average cost, I know that's all over the board, but when we work with small business all the time, and we say we need an accountant, and, you know, is it transaction-based, business-based? I mean, and if you all could, a small business average cost per month, if somebody says, I'm gonna charge your small business $500 in accounting, and you barely grossing, say $5,000 a month. So is it transaction-based, or is it the entity, just from a range of small businesses knowing, you know, if somebody gouging me as an accountant because they, you know, say I need the waterworks and really I have 10 transactions a month or something like that.
So we have a minimum fee for services, and as I think we were talking earlier, our business has gone through quite a bit of change last few years, where there's basically no supply and a lot of demand. There's a lot of people my age getting out of it, and a lot of us don't have exit strategies or family members that can't come in and take over for a lot of reasons. So I personally have seen a fairly significant increase in those types of services. But again, it depends on the volume, if you will. It depends on what you want and how often we meet, what you think your needs are, and what I think your needs are. So, you know, you're going to find firms that charge less or charge more, and I think if you're comfortable with that person, it might be worth considering the fees that they have. I don't know of, in our area, I don't know of anyone that really gouges, so to speak, in terms of fees. What I have seen is, again, you know, a lot of people in the next 5 years are going to be shutting their practice down because they have no succession plan. Not a lot of kids are going into accounting.
I think that depends in the firm and the office, because with us it's a little bit different. We usually don't charge a lot to the community, and most of my clients are like friends, like family, being with them for years and years, and some of them just came over and sit down with me, talk to me about their business, their problems, and we just talk. We don't charge them for those kind of things. Sometimes they ask for advice, or they give us a call and they say talking with us, and we just think in my firm it's important the relationship with the clients, because if they came over and talked to me and they told me the truth and I explained them as much as I can, and when I'm not sure about the things, I said, wait, let me consult somebody that has more experience than me. I think that is a little bit more valuable, and in this area you can not, like he said, you cannot charge too much, because we know the business are growing and we are part of those business.
We always ask for a couple of years' worth of tax returns to review if they are available. When we get a new client or a prospective client.
Well, yeah, that is a big part.
We always ask why you're changing accountants.
Yes.
How many accountants you've had in the last 5 years? That's all telltale signs.
Yes, because when they talk to you and they answer you those questions, you know that they are who they are. Because sometimes they tell you stories and you're like, that cannot happen. But you know, when you talk to them, because usually it's important for us to know what were you 2 years ago, what were you doing, what your former tax preparer were doing, and not because we think they're doing wrong, it's because we need to understand if there are credits they are bad, if there are things they are not taken in consideration. So it is important for us that you as a client came over with the truth, with open mind, everybody's different, things different, they see things different.
So for a lot of our new small business clients that walk in and they tell you a little bit about themselves and what they're looking for, can most accountants give them at least a range of what they believe the fee might be for the service? Like, for instance, in my world, when I said, listen, I want to do it the easy way, I'll give you my bank accounts, give you access to my bank accounts, or send them the bank accounts, and then if I said, this is how I want to do it, would a range be available if a client came in and talked to someone like you, so they can get an idea what they're getting themselves into?
For sure, and providing some information, so we would know the volume of work.
Sure.
Do you have 5 business checking accounts and 10 business credit cards, and each one is 5 pages each? I mean, obviously, a new business starting off might not, but a more experienced business would, or a new small business that has 1 business bank account and 10 transactions a month.
And we have
We'll give a range.
we have engagement letters for each thing like that, and we have an out every year. The client has an out and we have an out, just because of that. Because hopefully they're growing, which means there's more business or more work we have to do. Both parties have to be reasonable in the engagement. And most people are.
Okay, thank you. We're nearing the end. We got time for one more question. We got right over here.
Hi, my name is Elizabeth Jimenez, and I own a staffing agency. And my question is a small business, when you start your small business and you look for an accountant, you agree with the accountant, everything's going okay, but let's say years after, you're like, things are not working out. Not my case, by the way, but I always think about it. I'm very happy with my accountant. Years later, you decide, I'm not gonna work with the accountant anymore. What is their part on giving you your documents back and all the information that they kept within the last 3 years, for example?
Well, the accountant's required to give you back your original documents. They legally can't keep it. If any work that they've prepared for you, if you paid for past tax returns, payroll tax returns, income tax returns, anything, if that was part of the engagement during your time with them, you paid for those, they can give you copies. Some accountants have fees set up where if they've already provided you a copy and you're calling and asking for more copies, there could be an additional fee for additional copies.
Would that include maybe access to QuickBooks, for example? If they're doing your QuickBooks and keeping all your information on that, is that separate? And they just give you documents, or they should give you back your access to QuickBooks?
I guess that depends on who has the access. If the accountant owns QuickBooks Desktop and is doing the work in-house, they don't have to provide you the access to their in-house QuickBooks Desktop file. If it's QuickBooks Online that you're paying for as the client, then they should be able to provide you with a password for that.
Okay, thank you.
I'm sorry. As a staff, just a side note, as a staffing agency.
Go ahead and grab the microphone. We'll take one more.
So my name is Vic. I work with Elizabeth at EC Staffing. So my comment is that as a staffing agency, we do absorb all of the employment expenses, taxes, insurances, and things like that. So if anybody in the room needs employees, we're here for you.
What's the name of the staffing agency?
We'll give you a business card.
Yeah, to just continue, I would like to add what she said. Yes, if the QuickBooks that belongs to the firm, they don't need to give you the passwords and username, but it belongs to you, yes. In the office, when a client requests to leave, we usually got my tax Illinois passwords and users, the IRS passwords and users, and we always give them their access because it's their business. The passwords for the IRS, for the IBT, for the My Tax Illinois, we give them to them because they need to go, they're going to go to another accountant, to another tax preparer, they need to have access. Those accounts doesn't belong to us, it belongs to the business.
Okay.
Thank you very much.
I was gonna say, there are business cards on the way out for the panel right here are on the table. If anybody wants to grab one, just so you know, they're on the table on the other side of the door.
Well, thank you. I'd like to thank Maggie and Rhiannon and Robert again for your expertise.
Thank you.
Thank you so much for coming. This has been wonderful. And thank you all for attending. There are going to be more seminars in the future. You'll certainly get notified of a marketing seminar coming up after the first of the year. And thank you all again. It was wonderful.